you can email me, becky@tradewithufos.com. You also have this link here, tradewithufos.com/Becky. Now, the beauty of contacting me through here rather than emailing me is that it's on a public forum. So I'm just going to show you what I mean by that. So if I come here, so tradewithufos.com/Becky, down here at the bottom, if you sign up for a free membership, you'll have the ability to ask a question. That question is then publicly posted, so other people can see the question, and then they can also see the answers as well. So you see other questions and answers at the bottom here. So the good thing about that is if you have a question as we're going through, if you have that question, probably other people do too. And so you can post it in an area where other people can see the answer, and you might come here and see that very same question that you have, somebody else has already answered, and you get the answer immediately, rather than email me and potentially wait a little while for me to respond to you. So that's the good use of that link. So it's tradewithufos.com/Becky. If you don't have a free Trade with UFOs membership, you just put in your email and full name here, click I'm not a robot, and follow the steps. You can also, on this link, book one-on-one sessions with me as well. So just click meet with me and you can book one-on-one coaching sessions with me. That's true of everybody's link, by the way. So if you're doing tradewithufos.com/Andrew, then you can book one-on-one meeting with him. Same for Boyan and whoever else. So hopefully that makes sense. Let's just go back to the slide here. I need to play the disclaimers. So you see that it's just highlighting at the top there. Of course, this is a legal requirement for you guys to have the disclaimers, but it's also really important that you guys understand it. When we're doing things like trading, ultimately, it is up to you guys what platforms you use, what trade size you use, what trades you place, how much money you use. We can show you a demonstration on how to use the products, on how we do things, but ultimately it is up to you to decide that. So you've got the disclaimers there legally, but hopefully my explanation as well makes sense. Just seeing there from Ray. Yeah, it's been a while since I've seen you, but I'm sure we'll mix once the world has righted itself. I'm sure we'll mix again in groups or whatever. Okay, so that's the intro. So just for me to have a good understanding of you, for you guys, let's go back to our trade session scanner here. Just for me to have a good understanding of you guys, how many of you have joined us before? How many of you have done the UFO method before? If you're completely new and you've never seen us before, let me know. If you're a veteran and you've been using the technology for a little while, let me know as well. It will then give me an idea as to how deeply I need to go into explanations of things. So just let me know. I'm just going to bring this up as well so I can see that. Completely new there from Ray. Okay. And okay, since Ray's the only one chatting with me. Oh, we've got Brian as well. Thanks, Brian. New to this. All right. If you're completely new, then we'll go from scratch and we'll work our way up. So the main point of what we do here is trying to make sure that we get as many probabilities on our side as possible. We want to make sure that when we're trading, we are doing it as objectively as we can. However, we also have to balance in that we are human beings and we have different subjective environments that need to be taken into account. So, for example, somebody who is wanting to long-term invest, they are going to do things differently, even if they're using the exact same technology and objective method, than somebody that wants to day trade. So we have to mold this objective application to different subjective environments, but ultimately the objective application is the same. So for me, in these sessions, obviously, hopefully the clue is in the name here, swing shots, we are looking at swing trading. So the same method, if you guys want to day trade or you want to position trade or invest, the same method is true. You'll just use slightly different time frames. So for us to start with, just so you guys have a good idea, I'll show you here. The time frames that we're going to be looking at are these ones, swing trading time frame. So we're using 240 and daily as our higher time frames. That's what we call our common time frame. And we'll be going down to a 21 or a 55-minute chart for our lower time frame or edge time frame. So those are the ones that we're going to be looking at. Again, for you guys, if you want to do different styles of trading, totally fine. Just use the different set of time frames and then you will apply the same methodology. Now we're looking at Forex. Forex for me is a decent swing trading vehicle. So again, that's what we'll be focusing on mainly. Now, the technology that we use is there to help us make decisions. So when we're trading, ultimately, the first thing we want to know always is, should I buy, sell, or do nothing? That's the first question we need to be answering. Most people think just because we're sitting down looking at a chart, that means we should be doing stuff. We should be pressing buttons. We should be buying. We should be selling. Actually, I would say most of the time, the answer should be do nothing. Don't place a trade for the sake of placing a trade if it lacks probability. It's just going to waste your time and ultimately lead to you losing money over time, which we don't want to do that. So we want to have something that clearly answers that question. There are different ways to do that. You might use trend analysis. You might use other indicators. For us, we are using our Auto Climate app, which helps us do this. Now, these scanners that I've got behind this here, so the scanners that we have here, these are scanning the climates for us and basically telling us where we have good opportunities to be looking at. So you can see this here, that we've got different colors, different words, different numbers. It can look a little bit confusing if you've never seen it before, but it's pretty easy once you've got your head around it. So if I just freeze it here for a second, you see on the edge, right on the edge of these scanners, you'll have yellow boxes, some of them. Those yellow boxes are literally highlighting to us, this is worth your attention. But that doesn't mean we're just going to look at it. We also need to look at what's going on here. You'll see some of them say near sensible short or near sensible long, and some of them will say near hopeful short or near hopeful long. Now, as traders, we want to be sensible. We don't want to be hopeful. Being sensible, by definition, I guess, means being more objective, means the process makes more sense, more sensible, right? We don't want to be hopeful when we're trading. That gets into the realms of being too subjective. So we want to be looking at these yellow boxes, and then we want to be looking at the ones that say sensible. Now, there is a third element here, in that you'll notice these columns, you've got different colors in them. Obviously, we've got red, blue, or sort of a grayed out non-color kind of situation. Now, the red shows us where we have a confirmed climate to that side, so to the downside. Blue tells us that we have a confirmed climate to the upside. The gray tells us that we don't have a confirmation either way, meaning lack of probability. So on this scanning part, the section that we're looking at here for the scanning, is just going to be looking for something that's yellow and says sensible, and that also has a color in it. So for example, this top one doesn't work because we don't have a color in this section. So the next one down is a near sensible short, and that does have a color. So we can go and take a look at that. Or for example, this one here, near sensible long, oh, that's not yellow. Near sensible shorts here for the Canadian Swiss, and that's got a color. So hopefully that makes sense as to how we're using these scans. By the way, if you want these scanners to upload into your TradeStation accounts, just either email us or let us know somehow, contact us through whatever link, and we can get these sent to you. So just email us and let us know. Okay, so I'm using the scanner to cut through a lot of time and find where I have higher opportunity things to do. So I'm going to look first at I think the Canadian Swiss there. Oh, that was hopeful. I think over on the majors, we haven't got anything lining up. We've either got hopefuls or we've got no colors. So let's have a look here. We've got, I'm just trying to see, might be that we don't have anything working out. We do on bigger time frames. So we've got this one on a weekly time frame. We've got near sensible short. So this will be moving into sort of position trading. Let's take a look at that. So I'm just going to go to the trading view charts here. Now, the first thing I actually wanted to do, for those of you that might have been on the last session, is have a look at that last trade that we put on before we start looking at new ones. So the last session, we looked at the New Zealand dollar, and we had a UFO over here that we were looking at. I believe that we were looking at a daily and a 55, I believe so. And this is what happened on the trade. So price came into the trade, triggered us here. It went off, hit our safety target, but we had a final target all the way up here, which it didn't reach. So what that means is we hit 1-to-1, half of our position came off here, and then we got stopped out. Now, all the time during this process, The climate was still a confirmed upwards climate, so we'd have still been taking that trade. We wouldn't have cancelled it at any point. So overall, this trade was break even. So that's what happened on the last one that we put on. Now, in terms of where we put our targets, the reason that we have this safety target is so that we didn't see price go in our favor and then come back and stop us out and we lost money. We saw price go in our favor, not quite all the way in our favor, but we still didn't lose anything. We still took that break-even trade. So I believe the Canadian Swiss here, if we look at Canadian Swiss, and I believe it was the weekly chart where we had the better opportunities, which means that we're going to be using 144-minute here on the right. So I'm just going to delete if I just put that on there as well. Okay, I was going to say I'll delete what's already on the chart, but it's already gone there. So we've got these two charts in front of us. I'm using TradingView, by the way. Let me know, guys, if you use TradingView as well, or if you use TradeStation, or what platforms you use. I'm just using TradingView here, as I think quite a lot of people use it, especially in the Forex world. And we're just going to be looking at the opportunities that we may have. Now, the point of the chart on the left is to answer that first question. Should we be buying, selling, or doing nothing? That's what this one here is telling us. The bigger time frame of the two time frames we're using, the bigger of the two is helping us answer that question. Should we buy, sell, or do nothing? Now, how do we know that? Again, you can apply different analysis techniques. We just use a very simple, essentially yes or no question here with our Auto Climate app. So the Auto Climate app is this bit that we see here at the bottom, this bit that I've highlighted here. And you'll see that the app is showing us different colored dots at the bottom. Some of them are thick, some of them are thin. The thick blue dots tell us that we have a confirmed probability to the upside, meaning it would be a good idea to look to go long. The thick red dots are the confirmed probability to the downside, meaning it would be a good idea to look to go short. So the Auto Climate answers that question for us, long or short. Now, if we had a thin dot of either color, you see these thin ones that I'm pointing out here, that would mean lack of probability either way, don't do anything. That answers the question, do nothing. So because we have here a nice thick red dot, that tells us we have probability to the downside, look to go short. That answers that question for us. So then we look over on the right-hand side to then be more precise about where we're doing it. Because just because we should be selling doesn't mean that we just sell right now or whatever the price is today immediately at whatever the time of day it is that we're looking at this. You know, if we are trying to place trades that have probability, just simply pressing buy and sell at market, whatever the price is now, probably isn't probable, if that makes sense. So to add probabilities into our trades, we want to find specific areas that are the best prices to buy and sell, which brings us to the second question. Just do that here. Second question is, if I buy, where? If I sell, where? If I'm going to buy, where should I buy? Where do I have the highest probability? If I sell, where do I sell? And that's what we use that smaller time frame of the two, our edge time frame, what we have here on the right hand side. We use that time frame and we use slightly different technology to help us answer that question. Now, this is where we come into UFOs, which is kind of in the name of the company, right? So trade with UFOs. UFO stands for, let's make this really big. So unfilled orders. There you go. So the capital letters there are UFO. What it stands for is unfilled orders. What that means in a nutshell is where we expect there to be big piles of buy orders or sell orders that are likely coming from institutions that can either push price up or down. So if they're unfilled sell orders, then we expect that if price gets to that level, those UFOs, those sell unfilled orders, will push price downwards. If it comes to a buy UFO, then we expect that to push price upwards. Essentially, we're using that UFOs to highlight the areas on a chart which have the higher probability. So when we are selling, which is what we're going to be looking to do today, when we're selling, we want sell UFOs, which are these red UFOs. It's the best time to sell. We want to be looking at where's the best price to sell. We kind of don't really care at this point as to what the buy orders are showing us. If we were looking to buy, then we would be looking at these green UFOs, ones where the bands are green. So Green is buy, red is sell. Now, on the right-hand side of these charts, you'll see the prices are highlighted for us. So that UFO band that's got the little, I guess, flying saucer in the middle there, those bands that are highlighted there on the right-hand side, those are the prices. So we use the prices given to us by the UFOs to help us out with what we're looking to do. Now, so far we've got figuring out whether or not we should buy or sell here on the left-hand side, or do nothing. And then if we're going to do one of the other, buy or sell, where do we do it? And then we use the UFOs to help us with that. Let me know if that process so far doesn't make sense. Hopefully it's reasonably sort of straightforward so far. There is another element to this now, because you might be thinking, well, hold on. There are quite a few UFOs on this chart. If I scrunch this up, in terms of sell UFOs, you've got this one, this one, this one, this one. Which one do you pick? Do you pick the closest just because it's there? Or is there something else that's going to help me figure out which of these is the best one to pick? This is why there's now another element in this to, again, make it as easy for us as possible. The more decisions we have to make using our own subjective brains, the harder it is to enact an objective methodology, and the harder it is to be consistent. If we have a question when we're looking at the markets and we have an objective thing, whatever that is, that answers that question for us, it makes the whole process so much easier, much less stressful. So if we've got all these different choices, how do we know which one to pick? This is where we bring in a third element, which is our EMA value. So the EMA value here on the left-hand side, this EMA value is plotted on the bigger of the two time frames. So in this case, we couldn't find any swing trading opportunities. So we're looking at position trading time frames, and we're using the weekly on our left-hand side. So we have the EMA there on our weekly chart. That EMA is showing us essentially an average of the last however amount of candles it represents. This happens to be a 9 EMA. So it's showing us an exponential moving average of the last 9 candles, so the last 9 weeks in this case. Now, why is that important? It's an indicator that probably, if you guys have been trading for any length of time, you've probably heard of or seen moving averages. Everybody in the world pretty much could have them on their chart if they wanted. They're free indicators that are accessible to everybody. They're also used by hedge fund managers. The way people usually use these indicators is they expect that if price hits the moving average and comes and hits this line, that it's going to come back down. If price was above the moving average already, if it came back down and hit the moving average, they expect it to go up. Essentially, we expect to see movement if price hits that moving average line. Now, that's obviously not always the case. We look over here on the left-hand side, we can see essentially the moving average has gone through the candles, right? We've not really seen much reaction up or down off of that middle point. But that is what is usually expected. Now, if that's usually expected and everybody in the world has access to these indicators and they're very commonly used, not just by the public, but by hedge fund managers, then we can assume that there might be a decent amount of orders coming in at that point. Now, if we then layer that, we have orders coming in if price comes and hits that moving average, and we have orders coming in at that UFO. If those two line up, we're increasing our probability. So ideally what we want to do when we're picking our UFOs here on the right-hand side is pick the ones that line up with our EMA. Again, it's a very objective thing. If I've got all this choice, if I've got all of these things I can do, how do I whittle it down to the best decision that carries the most probability? Basically, does it coincide with the EMA, yes or no? If it does, great, good trade. If it doesn't, no worries. Now, it just so happens the EMA right now is 0.6928, which is, I guess, about here, which is nice, snug inside our UFO. So that means we now have an opportunity to place a trade on this market, the Canadian dollar versus the Swiss franc. So we've gone through this process now to come up with an area where we're going to place a trade. Let me know, guys, if at any point throughout this process from what we do on the left-hand side, what we do on the right-hand side, the different elements, let me know if there's any confusion, if there's anything you need me to go over again. But otherwise, I'm going to walk you through then placing this trade. So if this is the trade we're now going to take, what I like to do, and this is just personal preference, is I like to use my drawing tools to highlight this on the chart so that it's easy for me to see later on and reference back to it. So I'm just going to get my Fibonacci retracement lines, and I'm just going to draw it around here. Now you might notice they do not look like your average Fibonacci lines. That's because I've customized them. So on TradingView, and this is also true on TradeStation and I'm sure many other platforms, if you draw something on the chart, you can then double click it and play about with it and change the settings and things. So that's what I've done. Usually it would look something like that. I guess you'd have loads of different lines in there. I just uncheck them all so that I have 0 on 1. I don't use Fibonacci as it is intended. I simply use it as a drawing tool. And then I click OK, and that's now my default. What you can also do is come to coordinates and type in exactly where you want those lines to be. So for me, I want my lines to be using the UFO pricing. Now, the first one is easy, 0.6918. So that's going to be 0.6918. That's my bottom line. That's going to be my entry price. Now, this top one, top number there on the UFO is 0.69499. So I do need to manipulate this number a little bit there to just add a little bit of wiggle room for my stop. So I'm just going to round it up to 0.6950, and then I'm going to add 5 pips. So round up and add 5 pips. So it's going to be 0.6955. However, what we also need to understand is that this is a stop loss on a sell order, which means the stop loss itself is a buy order. When we're buying, we normally want to add a couple of pips, again, to give it a little bit extra wiggle room because of the way the bid and the ask works. Essentially, we're going to add another couple of pips. So we rounded it up, 0.69494 became 0.6950. We then add 5 pips, it's 0.6955. Then add another couple of pips, that's 0.6957. So I can type that in here, and you'll notice when I click OK, my lines have just moved there. So rather than try and move the lines and draw them and get them exactly where you want to be, which can be annoying, you can just double click on them and type over on the coordinates where you want them to be. So my entry price is now this one. My stop loss price is now this one. So that's where I'm going to get in to go short, and that's where I'm going to get out if I'm wrong. I'm going to protect myself in case I'm wrong. But what if I'm right? Obviously, I want to be able to take profits. Where do I take profits? Again, we need to be objective about this. So the first target, the safety target, is an easy one. It's going to be the same difference between my entry and stop. Again, essentially a 1-to-1 target. So if I just was to type this in over here using the tools that we have here on TradingView, 57. So I can see here that my distance in pips between my stop loss and my entry is 39 pips. Didn't need to work that out, just type it into TradingView and it does it for me. So I can click take profit and type in 39.0, so 39 pips, and it's now worked out for me exactly what price that would need to be a 1-to-1 trade. So it's 0.6879. So I like to get a horizontal ray to put my targets in. Again, it's just a drawing tool that I've customized, and I'm going to draw it somewhere roughly on the chart and then type in the number. So 6879. That's actually really close. That's the amount. There we go. So that's now my safety target. Very easily done. Now I can place this trade now, but first of all, I want to figure out what I'm risking. Again, the beauty with TradingView is that I can tell it exactly what I want to risk. I'm going to be very, very just crude with it and just say my total risk for this trade will be $100. If I have 2 targets, I'm going to have $50 on each target. Also $50 that I'm risking on one, $50 that I'm risking on the other. In total, $100 risk. Of course, when it comes to risk, that's entirely subjective and up to you guys, what you want to risk per trade, how you want to weight it, what percentages of your account you're using. For me, I'm just using 50 because it's a nice round number, just to prove the point and show the point about how we put these trades on. So I've put in 50 there, so I'm risking $50 on this trade. It's then worked out how many units that needs to be, and I can just click sell. You'll now see that I've got these things come up telling me that my order's been placed. I also have the sort of boxes come up on the chart to tell me I've got a sell limit at that point, stop loss at that point, and a profit at that point. Now, we're not yet done because I'm sure we don't just want to keep taking 1-to-1s off the table, right? We want a little bit more money coming in. We want to make sure that we're profitable. The good thing about having our one-to-one safety target is that we are less likely to lose. It doesn't necessarily increase our profit rate, but it decreases our losing rate. So if price were to do something like this, come in, hit that stack of sell orders, hit the EMA, come away, go somewhat in our favor, and we want to take profit down here, for example, and then come against us, the worst that's happened is we've locked in half of our profits or half of our risk there, meaning we would make $50 at this point, lose $50 at this point, break even. We don't win anything, we don't lose anything. So even if price goes in our favor and then comes against us, the worst that happens is we make nothing. Not that we would lose money, which can be frustrating. So where are we going to put our second target? Now, again, we need something objective to help us answer this question. So I'm going to come over here and I'm going to show the auto UFOs on the left-hand side. It looks like we don't have, that's interesting. Okay, so we don't have any buy UFOs on our weekly chart. Now, normally what we would do is if we're going short, we would look for buy UFOs, so the opposite on our bigger chart for our target. If we were going long, then we would look for sell UFOs on our bigger time frame. Considering we have none, we could basically put in any target and then trail our stop. So cancel the profit target and trail our stop behind price as it moves. So what I'm going to do here, I'm going to put in the same details. So our entry price was 6,897. Stop loss was 6,9. Oh, sorry, no, it was, I've done that wrong. So 6,918 was our entry, and our stop loss was 6,957. Profit target, I'm just going to put 0.60. It's 23 to 1. I'm going to move it, don't worry. I'm then just going to put in $50. So I'm now adding to my total risk here, $50. I'm going to click sell. And what you'll notice, once again, I have these pop-ups come up, and I will now have another box here, which is sticking to my entry and my stop loss. If I was to squidge this right the way down, we'd see our profit target all the way down here somewhere. There you go. I'm just going to cancel this profit target. I believe. Oh, that's cancelled the stop as well. I can put that back in. I might need to cancel that main order. Oh no, it looks like it's still there. Hold on one second. I'm just going to double check that. Oh yeah, we still have our stop, so we're good. Okay, good. So we have 2 entries, 2 stop losses, and 1 profit target, meaning if price were to come in, go off and hit our profit target, and we take half of our risk, we now know the worst that happens is we break even. Price continues to the downside. Well, how do we know when to then take our profit? We don't want it to be subject. So what will happen is as price moves down, if it does move down, new UFOs will form. So we'll end up with something like that. We'll have a UFO, and maybe we'll have a UFO, and maybe we'll have another UFO that form along the way. And all we will do is we'll take our stop loss and we will put it behind the next UFO and trail our stop. So if price goes in our favor and continues to move in our favor, we are locking in that profit as we go by moving our stop loss behind objective places where we expect to keep pushing price down anyway. So hopefully that makes sense. So that's an entire process of using the scanner to put it on a trade, to managing the trade there. Let me know any questions, any comments, any confusions, just let me know. I'm happy to explain it again. I'll have a look now and see if we've got time to put on another trade. But essentially, that's the process start to finish. And that's how we use the technology to help us out here. Now, there are, I would say, more layered parts of using this technology, in the sense of you might be thinking about these numbers here. What does this mean? We can use extra things, once again, to add to our probability. For the sake of today's session, I'll keep it more simple. But as you join us on sessions, you'll understand the other elements of the probability that we can add in. So let me know if you guys are all okay so far, if it all makes sense. If it does, let me know, just say yes so I know you're all right. If it doesn't, let me know and I can explain it, no problem. Okay, all good for Ray. Good. Alrighty, so I'm going to go back to TradeStation and I'm going to see if we have any other new opportunities. So it still looks like when it comes to the majors, we've got nothing in terms of swing or position trading opportunities, nothing that's lining up where we want it to be. Remember, we want this to be a yellow box that says sensible, not hopeful. So if we look at the sensible ones, this is a yellow box that says sensible, but we have no confirmed climate. So it's not lining up the way we want it to be. So on the majors, no opportunities there. When it comes to the cross pairs, we've got a couple of sensible ones. Oh, here we go. It looks like Aussie New Zealand is showing us a near sensible opportunity. So let's look at that. That's on our swing trading one as well, which is good because this is a swing trading session. Okay. So we had Aussie New Zealand. Make sure that you put it on both charts because you don't want to be doing analysis on the Canadian Swiss on the right and Aussie New Zealand on the left, and you're doing the wrong thing there. So we also want to make sure we're looking at the daily chart here and therefore the 55-minute chart on the right. Now, in terms of why we're using these potentially random looking timeframes, there is a reason for that. It's essentially because it's giving us a higher edge. That's why we call it our edge time frame, to be using slightly off timeframes than what the majority of people are using. But you could use a 60-minute instead of a 55. So if you're using, I don't know, other platforms, or you're using TradingView and you've got the free version or whatever, and you can't get a 55-minute chart, don't matter so much. You can use a 60, so no worries. Okay, so we're going to do the same thing we did before. We're going to use the left-hand side to answer a question whether we're long, short, or do nothing. Here we have a confirmed upwards climate. We have a probability to the upside, thick blue dot. Now, like I said, there are other factors we could look at here with the auto climate to determine whether or not it's still a good idea. For the purposes of today, and just for simplicity's sake, we're going to say thick blue dot, we're going to go long. Let's not even look at anything else. We're going to look for long opportunities. Now, are we just going to go long anywhere? The answer is no. Just because we're going to buy doesn't mean we just press buy or just press buy at any place. We want to make sure that we have probability. So we're going to look for buy UFOs. So they look like this, the green ones. But if we have different options, which nearly always we do, how do we know which one to pick? We need to add in this third element. So we're going to look at our EMA value, which is 1.0651. That is around about here. Now, what we see from this very, very plainly is that the EMA is nowhere near any of our UFOs. That means no trade. We don't do it. We're not having the probabilities line up the way we want it to. Now, of course, could you have your own rules that say, well, I won't even look at the EMA, I'll just use UFOs? Yeah. Could you be using other indicators instead of an EMA? Yeah. Could you be using, I don't know, not be using UFOs and just use your EMA? Yeah. Ultimately, totally up to you how you trade and what methodology you use. When it comes to our methodology, it's all there for a reason. It's all objective. And the point with this is we don't have probabilities lining up in the way that we want them to. So no trade. The great thing about this is it's a very quick decision. We look at it. Is it there? Is it not? Yes or no? There's no umming or ahhing. There's no looking through millions of charts. It's just either an opportunity or it's not. If it's not, we move on. So still got time to have a look at another one potentially. So let's come down here and look again at our sensible or not sensible opportunities there. So we've just looked at the Aussie New Zealand and determined that that wasn't a good trade. So even though it was a sensible idea to look, doesn't necessarily mean it's a good trade to take. We then have this one. So this is New Zealand Canadian, I believe. There you go. New Zealand Canadian is showing us a near sensible long with a confirmed climate. So let's have a look at that. So into DCAD. Again, these were the swing trading time frames. Oh, sorry, it's into DCAD. So we're using daily on the left, 55 on the right. We have a thick blue dot, confirmed upwards climate, probability to the upside, looking to go long. Lovely. We have UFOs on the right. That's helpful. And we have our EMA value that will help guide us to the right UFO. So the EMA value there is 0.9083, just rounding them. 0.9083 is about here, which is nicely snug inside this UFO. So again, what this is showing is just because this UFO is the closest one to you doesn't mean it's the best one to take. The best UFO to take is the one that has higher probabilities lining up with it, which we see there in the EMA. So we're going to plan a trade for this UFO here, this second one down. So I'm going to take my Fibonacci lines, sort of draw it roughly around that area. I can double click on it so that I can then change my numbers. So as we're going along, we're using these green sort of coloured band price things on the right hand side to help us figure out our entry and stop numbers. As we're going along, the entry order here is a buy order, which means that that number of 0.9091, I'm just going to round it up by a couple of pips. So I'm going to make that 0.9093. The stop loss price I have down here, 0.9074746. So I'm going to round that down to 0.9074, and I'm going to take away 5 pips. So that becomes 0.9069, I believe. There we go. So that's my entry and my stop. Now, just because that's my entry and my stop, I need to now know where my safety target and my final target will be. So I'm going to come across here, click buy, type in my numbers. So 0.9093 is my entry, 0.9069 is my stop loss. That's a 24 pip difference between entry and stop. So I can then come to take profit, put in 24 pips, and it will tell me what that price needs to be. 9117. Saves me doing any maths. Not great at maths, so saves the effort. We can use these tools that TradingView provide us. So I've just drawn that horizontal ray there again, just for me, so I can visually see where my targets are. And I'm going to put in the number that I see there, 9117. Same thing with this one. I'm going to say I'm going to risk $50 per each half of my trade, so a total of $100 risk. Again, entirely up to you guys where you want to do that, or how much you want to do that by. That's subjective, but for me, I'm just going to go for 50. I'm just going to click buy. There you go. Everything's gone in. I've got my pop-ups. I've got the things that I've now shown there on the chart. Now I'm going to look for my safety, my final target. So since we're going long, which means we expect the market to go up, we are buying, we are hoping to make money on the upside, then we want to get out of that trade before it's likely to come back down. And this is what these red UFOs are showing us, is where there are sell orders that may be likely to push price back down. So I want to get out before that. So the closest red UFO that I have here on the left-hand side, the bigger of the two time frames, the numbers there, the bottom number is 0.92336. So I'm just going to round that down to 0.9233. So I'm going to come back in, click buy again, type in my numbers. So we've got 9093 to 9069, and our profit, again, using these numbers up here, will be 9233. That's a total of a 5.83 to 1. That's what this tells us here, our risk to reward. So overall, I've got a 1-to-1 trade, and I've got a 5.83 to 1 trade. Somewhere in between there is 3-ish to 1. If I was to hit both targets, it would work out at 3-ish to 1 that I would be making out of this trade. Once again, I'll put $50 in that I want to risk, and I'm going to click buy. I'm just going to put my horizontal ray up here as well, because this keeps it there nice and easy for me to see. It was 9233. I'm getting accurate on this. There we go. So now on this trade, we have our entry, our stop, our targets clearly marked on the chart. I like that visually. We've also got that we can see our profit targets and our buy limits, and our stop loss is in there. We have 2 trades now in the system. One is a position trade short, one is a swing trade long. We're using different currency pairs, so we are quite decently hedged in what we've done so far today. We have our safety targets, so that if price goes at least 1-to-1 in our favor, whatever it does from that point, the worst that happens is we break even, we make nothing. If we're very right and it goes very much in our favor, then we take this target and we take this target. It limits the possibility of just being wrong, because price would have to literally just come straight through the EMA and the buy orders in order for us to lose this trade outright. Some form of small movement, as long as it's at least 1-to-1, will at least guarantee that we don't lose this trade, even if we're not winning. So hopefully that makes sense as to the target process there. So we've got 2 trades that we put on today. I'm glad that we managed to get through 2. There hasn't been very many questions or very much, I guess, feedback. So I'd like to assume that's because you guys get it and it makes sense. If I haven't made any sense whatsoever, don't worry. The more sessions that you join with us at Trade with UFOs, the more it will make sense. The Auto Climate, by the way, is an app that's free. You can download that for free and start using that. The Auto UFOs, depending on what platform you use, there's different fees attached to it, but very affordable. If you go to tradewithufos.com/Becky, get yourself a free membership. You can then walk through from there to get your apps and stuff. If you have any questions, again, if you have the free membership, then you can ask a question here, which I'm happy to answer in a public forum so that everybody gets the answer, or you can email me, becky@tradewithufos.com. So hopefully this has been helpful, guys. Hopefully you've got some good sort of trading application ideas and you understand the demonstration that we've gone through. Any questions, please let me know, and have a wonderful Christmas. We've got a couple of days left. Have a lovely time, guys. I know it's a weird one this year for everybody pretty much all over the world. So stay safe, stay healthy, have a great time, and I will see you in the new year. Have a good one, everybody. Thank you, Ray. Happy Christmas.